Okay, so artificial intelligence is completely rewriting the rules of the stock market. It's launched a few tech giants into the stratosphere, and it feels like everyone is scrambling to get a piece of the action. But here's the thing, the smartest investors, they're looking somewhere else entirely. So let's break down the strategy they're using that, honestly, most of us are missing.
Here's the billion-dollar question on everyone's mind, right? Who is actually going to win the AI revolution? I mean, the obvious bet is on the companies building the technology itself. But what if the biggest profits aren't made by the creators of AI at all, but by the companies that will learn to master it?
To really get a sense of the scale here, just look at this number, $2.1 trillion. That is the staggering amount the biggest tech companies, what Vanguard calls the AI scalers, are pouring into building out this new world. This isn't just some market trend, it's an economic revolution, kind of like the industrial age all over again.
Now, you might think all this excitement is just hype, but there are some really powerful economic reasons why the market is so bullish on AI. Let's dig into why this isn't just irrational exuberance, but actually something way more fundamental.
So according to Vanguard's research, AI isn't just, another tech trend. It's what economists call a general-purpose technology. Think about things like the printing press, electricity, or the internet. These are technologies that don't just improve one little thing, they fundamentally retool the entire economy.
And this chart, it really puts that potential into perspective. Vanguard is projecting that AI could boost US GDP growth up to 3%. Now, I know, a jump from 2.4 to 3% might not sound like a huge deal, but in an economy worth over $25 trillion, that's hundreds of billions in new economic value every single year.
Okay, and this is the really crucial part. This is where the story gets a lot more complex. A boom for the whole economy doesn't automatically mean a boom for every single investor, especially not for the ones just piling into today's big market leaders.
Yeah, think of it like a coin with two very different sides. On one side, you've got this incredible economic upside for the whole country. Awesome. But then you flip it over and you see the potential stock market downside for individual investors. When everyone expects perfection, valuations get stretched way too high. And remember that massive $2 trillion investment? Well, that has to be paid for, and that could really squeeze future profits.
So what do we do? How do we navigate all this? Well, the good news is we're not flying blind here. This is not the first time a new technology has promised to change the world. And by looking at the past, we can actually find a map for the future. You've probably heard that old Mark Twain saying, right? History doesn't repeat itself, but it often rhymes. And, when we look at past tech booms, from railroads all the way to the internet, we see the same patterns, the same rhymes that can warn us about the risks in today's AI market.
Okay, now you got to look closely at this chart. That red line shows the current AI investment boom. See how it's tracing almost the exact same path as previous revolutions? It's a mirror image of the railroad boom in the 1850s and the telecom boom in the 1990s. History tells us we are right here, in the super steep, super expensive, and really speculative build-out phase.
And this right here is the biggest lesson from all those past booms. The early leaders, they almost never stay on top. Just think about the dot-com bubble. The pioneers were often replaced by new challengers. It's a process economists call creative destruction, where new innovations are constantly disrupting and replacing the old guard. It's a powerful force, and one we really need to remember.
And if you want proof that this threat is real today, just look at this. There are nearly 7,000 private AI startups out there. To put that in perspective, that's more than the entire number of public companies in the US. The next industry giant is almost certainly hiding somewhere in that massive group, and it's probably a company most of us have never even heard of.
All right, so if chasing the big, flashy AI stocks is basically a high-stakes gamble, what's the smarter move? Well, Vanguard proposes a playbook that looks beyond all the hype for a much more durable strategy.
Okay, so to get their strategy, we first need to do a quick refresh on two classic ways of investing: growth and value. Growth investing is what we've been talking about, chasing those high-flying tech companies with huge potential, even if their stocks seem pretty expensive. Value investing is the opposite. It's about finding solid, often overlooked companies that seem to be trading at a discount. In this AI frenzy, almost all the attention is on growth. Vanguard's argument is that the real opportunity might actually be in value.
And this is the absolute core of the whole argument. This is the big idea. The biggest long-term winners of the AI revolution might not be the companies making the AI, but the companies that use the AI to become dramatically more efficient.
We're talking about industrial, financial, or healthcare companies that adopt AI to slash costs and just boost productivity through the roof. So what does this playbook actually look like in practice? Well, it's a diversified strategy built on 3 pillars that are pretty different from all the current hype. First, high-quality bonds for stability. Second, a focus on U.S. value stocks. Those are the potential AI consumers we just talked about. And third, looking at international stocks and other developed markets.
And the thinking behind this is pretty smart, right? It's all about balancing caution with opportunity. The bonds, they act as a safety net if the AI bubble pops. The value stocks are set up to quietly benefit from all this new AI-driven productivity, but without those sky-high prices we see today. And international stocks, well, they're kind of a bargain right now, a chance to invest in global companies before the AI hype spreads to them.
And, we can really wrap this whole thing up with this timeless piece of wisdom from Warren Buffett, because it perfectly captures the entire idea. The AI revolution is absolutely real, but the best investment may not be the most obvious or the most expensive one. The real opportunity might just be in finding those truly wonderful companies, the quiet adopters of AI that are still available at a fair price.